Hi, everybody. I'm Ross Healy, the chairman of Strategic Analysis Corporation, and I want to welcome you back to Friday Focus, which I look at the market and stocks from the unique and powerful perspective of Structural Valuation Analysis, or SVA for short. I hope that you had a good final week of the summer. I certainly did. And I trust that you too are pleased to be back and watching those soaring gold stocks. But I'm not going to be talking about the gold stocks today. I'm going to be looking at another group which has been doing well lately as well. Now, when I was growing up, my sister and I used to ask, as kids do, "What's for supper, Mom?" And she would sometimes reply, "It's you'll see pie," as in you will see pie. Today, I'm going to do something completely different. I'm going to show you 6 SVA stock charts, and I'm not going to tell you what those stocks represent for now. They are you'll see stocks, and the reasons for this will become apparent as I progress. Okay, so let's go. Well, here's the first stock. And what do you notice when you look at this chart? What you see is those lines which represent the price to book ratios at the various valuation levels of this stock. So what you're seeing here, when you look at the slope there, you're seeing how fast that this stock has been growing. Going all the way back here to 2000, it's been a very, very steady progression. Now, what's really interesting about this stock, earlier on, it peaked at its HC price, that's its high conservation price, but for years and years and years, this company has been peaking at its high mid price. That's 1.25 times its book value with staggering regularity. The second stock that I'm going to look at has exactly the same kind of a pattern, doesn't it? A beautiful growth in the book value for years and years and years. Now, in this particular case, this stock tended to peak at its high mid price, that's 1.25 times book, and lately it has been getting up even higher. The stock, look at that, it's broken out over its high mid price. And when a stock breaks out over a critical valuation level, it tends to go to the next breakpoint. Here's a third stock. And look at that. The same beautiful kind of pattern. Steady growth in the balance sheet with a strong penchant of peaking one breakpoint above its normal price at its high mid price here. And indeed, very lately, the stock has been up there and has actually hit there and has set back a little bit from there. So this stock looks as if it's pretty much got to where one might have expected it to get based on its long-term history. Here is a third stock. And again, for years and years and years, the stock tended to peak at its high mid price. And then, rather lately, it hasn't been able to get any further than that. But look at the stock price now. It is actually broken above there, as we will see momentarily. A fifth stock that has a kind of an interesting pattern, doesn't it? Earlier on, this stock tended to peak out at its high conservation price, its HC price, or about 1.5 times its adjusted book value. And then for a long period of time, the stock kind of set back one breakpoint and it tended to peak at its high mid price. Lately, it's been peaking at its normal price. And when we look at the growth of the balance sheet, we can see it's been kind of slowing down. Well, this stock, as we will see momentarily, has broken out over its low mid price. And I would guess that the stock is very definitely heading for its normal price. And our final stock is this one here. And you'll see for years and years and years, the stock tended to peak with astonishing regularity at its normal price. Earlier on, it was higher, but for years and years and years at its normal price. Now, that stock has broken out over its low-mid price, and it looks to be heading there to its normal price. Now, what are these stocks that I have been showing you? Well, if you haven't guessed already, these are the Canadian bank stocks. And let's take a closer look at them from a point of view. And here is the Bank of Montreal. For years and years and years, it's peaked at its normal price. Now, the stock price is currently 173. It's broken out over its low-mid price at $160, which you can see, which tends to tell me that it wants to head back to its usual high at its normal price, and I think it'll get there. Here's the Bank of Nova Scotia. As I said, it looks very much as if the growth of the company has been slowing down. It peaked at a high range earlier on, and then it stepped down even further. Now, you can see here that its current price is $87. It looks like as if it is broken out over its low-mid price, and would suggest to me that we are going to see a move to the normal price. Here is the Bank of Commerce, and again, higher highs, lower lows, and then of recent days, it had slowed down and was peaking at its normal price. However, look at the current price and look at the breakout here of the normal price. It looks very much to me as if it is going to be heading back to its usual highs at its high mid price, or $129. I would very much want to hang in here. Here's the National Bank, which actually over time has been getting stronger and stronger. Its valuation highs have been steadily increasing, and indeed, when I look at the 5-year compound rate of growth of the balance sheet, it has picked up quite substantially, and the stock actually got back up to its high at mid price at $160, and that appears to be it for the time being. It's hit there and set back. I don't know whether it can do anything else, so I would maybe switch into another one of the bank stocks which have better upside potential. Here's the Royal Bank of Canada. Its acquisition of HSBC, I think, has given the stock a new lease on life and a new pickup in the growth rate of the company, although we have not yet seen it in the growth of the balance sheet, which remains almost a perfect slope upwards. Historically, this stock has tended to peak at its high conservation price, and it looks very much as if it's heading there now. Its current price is $201. Its high conservation price is $217. I think I would hold out for that price, but beyond that, I don't think it's going to be possible to go. Finally, of course, we look at the TD Bank. Now, we know that the TD Bank has had its share of problems, hasn't it, down in the States. And yet, when you look at the TD Bank, you wouldn't particularly notice that there was anything wrong with this, would you? And indeed, after a setback, it looks very much to me as if the stock market has sort of gained a new comfort with TD. I myself would expect that there is a good possibility that this company is going to get back up to its high mid price where it has peaked for years and years and years. In closing, let me add one thing. When I was a founding partner of Scepter Investment Counsel, part of my job was to beat the Canadian Bank Index for our clients, because the overall job of Scepter was to beat the stock averages, and therefore we had to beat each individual sector. And my responsibility was the bank averages. I did so, and I did so regularly. And now I trust you have an inkling as to how I managed to do it as far as the banks are concerned. You tend to sell at those peaks, you buy those dips, and you can do very, very well. By using SVA, although I have to add this week's Friday focus by observing, as I hope you clearly saw, that beating the bank index is a bit of a mug's game, isn't it? What you really want to do is you want to buy and hold these stocks for the very long term, adding to positions when the stocks fall temporarily out of favor, as they do from time to time, and as I think you could see. And by doing so, that's the way that you beat the bank index. Anyway, that's enough for today. Until next week, do have a good and profitable week, and I will see you on September the 12th.